Hi, everyone, and welcome to our session today on solving for the multi-trillion dollar credit opportunity. This is on behalf of Visa Fintech Initiative, India. My name is Madan Mohan Rao from Your Story Media, and on behalf of all of us at Your Story, welcome to our session today. We have four outstanding speakers with us today, but first let me set the context a little bit. The Indian fintech sector is expected to have a valuation of rupees 6,207 billion by 2025. Given the potential of fintech solutions to drive impact and foster innovation, Visa, the global leader in digital payments, is set to launch its new program for startups and fintechs in India. With the sector garnering a lot of interest, not just from entrepreneurs, but also venture capitalists and government entities, this program aims to help them enhance product propositions and develop better user experience. To tell us a bit more about the Visa Fintech Initiative in India, the focus, objectives, and the kind of collaborations and outcomes that Visa is looking for, we have with us Sujay Raina, Head of Business Development for India at Visa. Over to you now, Sujay.
Thanks, Madan, and good evening, everyone. My name is Sujay. I head business development for Visa in India, and it's a pleasure to be with all of you today. So the Visa Fintech Initiative that we are embarking on today is the latest in a series of fintech outreach and engagement programs that Visa has done across the world and also in India. Some of you may be familiar with the Visa Everywhere initiative that we did last year, where we had actually posed three different challenges in the realms of B2B payments, merchant flows, and digital issuance. And we received a tremendous response to that event. That's kind of helped us think through what we want to achieve with this year's edition. So this year's Visa FinTech Initiative is essentially a platform for us to engage with fintechs and provide world-class content and thought leadership to the ever-increasing fintech community in India. The idea is to take specific themes which are here and now and very relevant for the fintech community and address and deep dive into these themes through a series of webinars, which will comprise one-on-one interviews, panels, and debates, not just with Visa subject matter experts, but actually representation from the industry, from founders and high-profile operators from Visa's global fintech network. These webinars will address topics like digital lending, neo-banking, tokenization, but also some of the more practical aspects of what it takes to succeed in today's fintech world. So how to navigate the regulatory and compliance landscape, for example, or how to prepare for a future-ready fintech workforce through skilling and upskilling. And finally, also understanding what does it take to ensure win-win outcomes between banks and fintechs when they partner together. So essentially what we're going to do now is put together this thought leadership and this world-class content and share it with you every week or every 10 days or so through a series of these webinars. I'm going to just stop here because I'm clearly not the highlight of today's show. And I'm going to hand over to my colleague, Arvind Ronta, who's the head of products and solutions for India and South Asia. But I really, really hope that the entire fintech community and the audience we have there enjoys these sessions and has an enriching experience. So all the best and have fun, guys.
Thanks so much, Sujay, for setting the context. That's certainly a very compelling initiative. Before we get to the next segment, let me just make a few more remarks now. Just think about this. The Asia-Pacific region alone, which is generally a cash-loving region, sees $17 trillion worth of payment flows, which are yet to be digitized. No wonder then that fintechs abound, each looking at serving a segment very different from the other. Hence, there is an unprecedented opportunity for innovation and financial inclusion in this payments landscape. Financial inclusion is a simple idea that allows people and businesses to access secure, convenient, and affordable credit and other financial services and use them to meet everyday needs and long-term goals. Simple, but not easy. Today, about half the adult world lives in the informal economy, dealing exclusively in cash. Solving for financial inclusion and this potential multi-trillion dollar credit opportunity is not an easy task, but has the power to create the next fintech unicorns. And this opportunity can come to life when more power and access to finance comes into the hands of consumers. One of the routes to doing this is to solve for the gap in credit access. When it comes to credit access, the Bnpl, Buy Now, Pay Later model, is getting greater traction among the various innovative ways in which customers are now being serviced. Simply put, Bnpl is a new and improved avatar of the decades-old concept of 0% finance offered for big-ticket purchases. The latest service offers all the business benefits without the heavy paperwork and lengthy processes accompanying the earlier versions of interest-free EMIs for buying consumer durables. It is rapidly becoming the preferred option for consumer lending in India, with the Bnpl industry projected to grow by 65.5% to almost $11.7 billion in 2021. It is also the fastest growing e-commerce payment method in India and is expected to grab a 9% market share by 2024. To discuss this BNPL solution and the multi-trillion dollar credit opportunity, we have with us Arvind Ronta, Head of Products for India and South Asia at Visa, and Hamish Moline, MD for Asia and Global Payments at Zip. Welcome, Arvind and Hamish. Happy to have you with us. Over to you now.
Thank you, Madan. And again, welcome, Hamish, for this interaction. So really excited, first of all. This is our first webinar series, first of the webinar series we're going to do. And what better topic to choose than buy now, pay later, which is truly a phenomenon. So in full disclosure, Hamish is also a friend of Visa, as he spent some time as our AP head of digital partnerships. So clearly, way to kick it off with him and his new stint at Zip, so that we'll be hearing about it. So maybe Hamish, for those who might not be familiar, why don't we kick off with a little background about Zip and what you do there?
Yeah, sure. So thanks for having me, and it's nice to see some of the Visa folks again. As Arvind said, I've worked at Visa for a number of years here in Singapore, leading their digital partnerships business and dealing with lots of fintechs all over Asia, but also all over the world, and learned a lot about where things are heading and what's happening. Just a bit about me, I guess. I've got a very, very varied background, but it's sort of around 2010. I joined eBay, obviously an e-commerce player, global e-commerce player, and got involved in digital commerce, and that was fast growing at that time. From 2010 onwards, it's accelerated. Eventually ended at PayPal with eBay and then Visa, as I said, in their digital partnerships area. And while I was at Visa, I also had the opportunity. Well, funny enough, Nick Molnar, the founder of Afterpay, was a large seller on the eBay platform in Australia, and he needed a mentor and someone who could talk to him and about his selling jewelry on the platform. And he came to me one day and he said, "Listen, when is PayPal going to bring their pay later solution to Australia?" And I said, "Look, I think it's going to take some time." And about 3 months later, he rang me back and he said, "Look, I think I'm just going to build my own, because I've spoken to these people in the US. They've added this kind of solution to their platform. They've increased their sales, 30% plus, doubled their sales in some cases in a matter of months." And he said, "I think this is going to work elsewhere." And so he started Afterpay, in 2015. So I've seen this from the beginning, sort of how it evolved, how they were thinking about it at the time, and what we've learned. And after my stint at Visa, I decided I'd go and help Zip. And so my role now at Zip is sort of helping them launch in Asia and sort of which markets we go after, but also thinking about our global payments infrastructure and the ecosystem and how we play within it, including bank partnerships, but also the acquiring and issuing, wallet integrations, all of the strategic partnerships we might do to sort of help our business grow. I sort of lead that globally for Zip. And so that's been a hugely exciting sort of last year and a half with them, although interesting during COVID, but also, we've had rapid growth, and the whole buy now, pay later sector has grown rapidly. So, it's been a good time.
Thanks, Hamish. So, for folks who don't know much about Zip, do you want to talk briefly about what the business model is and
Sure.
who you target and what are the products and services?
Yeah, interestingly, Zip. So today, funny enough, you won't see it. I'm at my house, but I had the APAC team over for dinner. We were celebrating our 8th birthday. So it's not like Zip sort of suddenly sprung out of nowhere. So it's 8th birthday today. 8 years ago, there was 2 founders who, looked at the very clunky, process for giving credit, particularly in sort of home electronics. And we've all seen that model, right? The GE Capital and apply, and that's where they started. They said we can make this a lot better. We can make it a lot more streamlined. We can make the process much easier for customers. We can make fees more transparent, and they wanted to create a fairer and sort of more transparent and easier process for longer dated installments, actually. And then, in 2015-16, we started to see this idea of installments shifting into shorter dated scenarios, pay in 3 months or even 6 weeks. And it appealed to a different customer, and it appealed to a different sort of vertical and category. So all of a sudden, this idea of an installment that you used to do for home and electronics and suddenly made sense for fashion and beauty and sports goods, and suddenly there was this new segment of the market that was growing, and so Zip sort of moved into that space. We're now in 11 countries around the world. So obviously started in Australia. We're now in the US, and that with a business called QuadPay that will rebrand as Zip soon. UK, we had our first transaction in Mexico today. We launched Canada and New Zealand, South Africa, the Czech Republic. So we're in Europe, South Africa, Australia, and the US.
Excellent, excellent. So, let's dig into it. So consumer lending isn't new, but buy now, pay later has really taken off recently. And it's really taken off with consumers. Consumers love it. What would you say has happened recently in the last 3 to 4 years that we've seen Zip and Afterpays and Klarnas and Affirms of the world really enjoying this ride, and Bnpl coming in really, in front and center of fintech landscape? Would love to get your thoughts on what's the driver behind this.
Yeah, no, it's a very interesting thing. So most people look at it and think, oh, it's just a different way of doing finance, but that's not how the users see it. It's a very different proposition, and let me explain sort of the key elements to it that make it different. The first one is, as human beings, we are fairly irrational with money, and we will come up with reasons why we should have spent something or could have, or we did, and we explain it away. And so one of the things about installments or buy now, pay later is this commitment at the time you buy something to pay it back on set dates. And that sounds trivial, but what's happening in the consumer's mind is they're budgeting for it. They're not using a open-ended facility to buy something. They're actually saying, this item I really want, and I'm going to commit to these repayments. And it's a very big mental shift. And we interviewed a lot of people who came out of stores early on at Afterpay even, and at Zip too now. And we say to them, hey, why did you use Zip? And they'll say, because I don't like debt. And so I said, well, hang on, this is debt, is it not? And they said, no, this is me budgeting. This is, you are helping me be responsible with my money. And that's actually the shift. And so there's that whole generation of millennials who have watched their parents with credit and credit cards get into trouble, and they've never wanted one. And they now think this is a responsible way in which they can use their future income or spread their payments. But it's for them, it's about budgeting and responsibility. It's not about the opposite. So that's a very, very important element. And that's one of the big consumer shifts, is this is helping me be responsible. I think the other very important concept that makes sense is, we've done installments around the world on many assets for many years. You pay your house off in 30 years, your car off in 10, your fridge off in 7, your TV off in 5. And then under that, it suddenly went, no, just get a credit card. And so this idea of installments works for large items, but not for small. And all of a sudden, and this is a very important element of buy now, pay later, matching the time frame of repayments of the buy now, pay later with the intrinsic value and time frame for the asset. And I know that sounds very financial, but this is about people understanding financial principles and literacy. Like you don't buy food and pay it off over 12 months. But buying fashion over 6 weeks or 2 months is fine. And they should be able to do that. And so, now you're seeing buy now, pay later or installment solutions matching assets and providing this new solution to different asset classes. And that's a big shift as well. I think the third is when you start to connect these together and you say, all right, we're helping people be responsible. We're ensuring that they use their finance in the right way. They match the assets and liabilities the right way, which is not how they think about it, but it's what's happening. If they do that, it shouldn't be expensive. Why is it priced the same for everybody? And why is it 20% per annum? And how do we think about creating a product that manages risk? And so the whole construct of buy now, pay later is about repricing risk. And so the new models are shifting the balance between, of risk and the cost to the consumer. And not, I don't want to go on too long, but enveloping that though is the proposition to merchants. And so that's the next big shift. And the thing that's really important about it is merchants like it because it helps increase their average order size, increase their conversion rates on their checkout. And it also means, they can offer this solution to their customers who are happy about it. And so the merchant proposition is a very, very important element.
Great insights. So, that's so interesting, right? Because oftentimes folks think that there's a hook of zero interest, and that's probably what people are going after this. I think what you are saying is it's more than that. People are looking for better control, more transparency, and some sort of their ability to match their purchases with their cash flows. And I think that's a very profound insight, because a lot of bad rep out there is that Bnpl is just for people who want some discounting and just looking for free interest deals. So that's really interesting, Hamish. So tell us from a global context, it seems like different models are, standing up, and not all of them are have different flavors. Some you started to talk about. Maybe give us a lens of what are the types of different models that exist, and then where does Zip play in that spectrum?
Interesting segue, the one about interest-free. Customers, they're not saying I should have free credit. They're saying I want transparency, the ability to understand the cost. I want some flexibility in my repayments, but I also want to sort of manage my money well. And if you can help me do that, and that's the proposition. It's not free. It's, hey, it's making me responsible. I'm happy to pay for it. And so my view and ours generally, and Zip already does this, we already charge customers fees for our services. So in Australia, we balance the merchant fee that we take and the fees we charge to consumers. And so, for our Zip Pay product in Australia, you pay $6 a month to have access to that. It's not free. Now, we don't charge interest or fees on every transaction, but it's not free, and people still love it. It's also allowed us to sort of balance how much merchants pay and how much consumers pay. In the US, we've got a model that says, hey, look, you can shop now anywhere with Zip or with QuadPay, but if the merchant isn't paying the fee, you have to pay it as the consumer. You pay a transaction fee for each repayment. And again, it's growing tremendously well because consumers want access to the product and they want it everywhere. They're prepared to pay for it. And so we believe the model isn't all about must be free to consumers and merchants must pay all the fees. And it's actually not sustainable. We're already seeing squeezed margins on the merchant side today. It's getting so competitive that people are undercutting each other and the merchant fee is getting compressed. And so all of a sudden there's a problem there that says, well, hey, how do they make money in the long term? And then when you think about not just 6-week repayments, but 3 months, 6 months, 12 months, you can't have a merchant pay all of those fees. It doesn't make sense. And so, I think the business model is evolving very rapidly to consumers pay, but you must be transparent. They don't like interest. They like a fee, but calculated, understood, know when I'm paying it, not opaque, not sure how it's calculated anymore. I don't know why I'm getting charged it, which is what happens today.
So maybe let's talk through again in terms of different markets. So Zip was in the news late last year with acquisition of QuadPay, and it seems like that's for expanding your footprint in the US. What can you tell us about the development of BNPL market globally, and which territories and countries you are seeing maturing faster than others when it comes to BNPL?
Yeah, so I kind of feel that we say it, but I don't know if it's totally true. A lot of this, I think the ideas sprung out of other parts of the world, perhaps the US and even Europe. I think Australia sort of embraced it and grew very, very quickly in the buy now, pay later segment. And so the penetration in Australia is probably the highest. Maybe UK is up there. And still only sort of 10% of consumers have used buy now, pay later in Australia and the UK. And so in the US, the numbers are as low as 3%. And then in some other countries around Southeast Asia and so on, it's even lower still today. And so, we've seen, and then many people have said, well, this model seems to work in, in more developed markets like the US, Australia, the UK. What about emerging markets? What's going to happen there? Could it work? And so, we've spent our time sort of investing in the US, obviously a very important market to win, given its scale, investing in the UK and Europe. But we're now spending a lot of time. We've got a company in the Philippines, we're launching in Mexico, and we're starting to really understand what it might mean in, in some of these developing markets or the markets that are less mature in this space. I come back to what I said earlier about these principles. Are human beings irresponsible with money or irrational, and do they want to be held to be more accountable for it and have help managing their money? Yes, every country in the world, because humans are all the same. Should they follow the financial principles? Do you pay something off that's already worthless, or do you pay it off based on its life? Well, that's standard everywhere around the world. And if I could manage risk differently and price it differently and make it more transparent, would people like it? Yes, they would. And so fundamentally, this product works everywhere. And so I think we're going to see huge growth in it. And in India, you've already seen lots of installment transactions already. And so I think there's a lot more to go. And so we're starting to invest heavily now in some of the markets that were sort of seem more risky, but we believe are not.
Yeah, thanks, Hamish. So I think interesting insights. So let's spend time on the pandemic and maybe walk us through how's that affected your business, and what's that has anything changed in your business over the last 12 months in both challenges and opportunities that pandemic may have presented you?
It's interesting going into the pandemic because you can imagine, and you saw share prices of lots of companies around the world, but particularly in this fintech space and buy now, pay later, we saw our share prices tumble, and the reason was, people were starting to say, hey, can you get access to capital? These are sort of loss-making businesses, although they're in growth stage. This could be, detrimental to the future of the business. And sort of we went into that thinking, oh my God, what's going to happen here? With the, the reduction in demand in some of the verticals we're in, it's going to be difficult. We found the reverse. I mean, which surprised us as well. Obviously, e-commerce grew dramatically during the pandemic because people needed things sent home. But also the spending patterns shifted. And so we saw, and this is nothing new, but we saw, people moving away from spending things, if they're traveling, they're no longer doing that, and they were spending on their house. And we happened to, be strong in segments where, like Bunnings Warehouse that's provided home, hardware goods and things. And so we actually found our business grew rapidly. The next thing we thought was, well, what's going to happen to bad debts? This is going to be brutal. And we ended up finding that, in fact, it wasn't nearly as bad. We of course we had a number, increased calls from people saying, "Hey, I need help, and can you help me out?" And we do that. We have a program for that. But overall, our loss rates did not dramatically increase to the point that we were concerned about it. So it's been an interesting. I think it's kind of accelerated the growth of buy now, pay later during the pandemic.
Excellent. I think let's take a segue into margins and economics. There's a perception that a lot of these models thrive well in a closed loop economics. And as you know, at Visa, we're trying to expand the ecosystem. We have a great partnership with Zip. Could you kind of spend time on just talking about how did you evolve from a closed loop to an open loop model, and how do you see a network like Visa playing a role in expanding the ecosystem?
Yeah, I came from Visa, so in my time while I was there, we involved in transforming the Visa's view of how they were going to deal with fintech and opening up their network to non-banks and letting new players issue cards. And I think, I saw a huge opportunity then for wallets, and you've seen them all now have a virtual card or a physical card even. And so many non-banks have gone into that space. For us, there was a big question around the economics because the interchange on a card is much lower than the merchant service fee we typically charge. And so, we had to balance that conversation. Thankfully, we charged consumers some fees already. So we already had a position where we're saying, actually, we don't believe the long-term view is it's always free to the consumer. And so this idea that the margin could come down on the merchant side, we could balance with consumer fees, helped us to sort of say, hey, you know what, for our very short-dated product, where we're getting people paying back very quickly, let's use it to really drive engagement. Instead of it only being available where you saw Zip's logo, it was now available wherever you saw Visa's logo. And so that was a big shift for us. We decided that the opportunity in scale and leveraging a global network versus trying to sign up every merchant in the world was worth that on the margin on our short-dated product. But I think, again, what helped us was we also have longer-dated solutions. So, 6 month, 12 month, and where merchants do pay a higher fee and consumers pay more. And so we could balance our revenue model across those. And so I think you'll find, and I think you're already seeing it, there's more players going into an open loop solution, but they must have the view to expanding their product offering. And it's not just paying longer durations, it's other banking or other financial services that they may add to the proposition that have other revenue streams. And so I think that's the next challenge for many of the buy now, pay later players is where's the next revenue stream and what's the next product?
Excellent point. I think, and we are dealing with this in India, as you said, a lot of action in the Bnpl space between issuers and traditional lenders, as well as fintech Bnpl players. And I think it's a good insight that, on a standalone basis, maybe Bnpl may not be as profitable, but it's seen as more as an acquisition hook or an engagement tool, as you said, where you can then upsell or cross-sell other products and services to these customers over time. So when I speak to a lot of folks in the banking community in India, as well as fintech community, a lot of interest in understanding installments and Bnpl across the world. And I think that was one of the reasons we wanted to have you, Hamish, here, so you could give global perspective. Anything that you see outside in India, from in India, what's happening here that you would want to comment on what are the 2 or 3 things in the market we could do differently based on the learnings from other markets. And then also, if you have any thoughts on what type of partnership could you see with players in India as an organization as Zip?
Yeah, I think from the outside in, I think the banks have sort of seen this coming in India and been more innovative. Actually, you've had installment solutions for a while, originally on credit. So I think I've seen lots of banks all over the world, and especially when I was at Visa, bring the wrong people to the table to talk about what solutions they should be providing. They send in their credit division, credit cards team, and I'm like, these are the wrong people to talk about buy now, pay later. Like, where are the merchant solutions team and the treasury team, the lending team? Because this is a new product, and it's positioned for a merchant benefit as much as a consumer benefit. And so I think that's been a challenge for the banks, and they've sort of looked at it as a alternate to the credit card, or allowing their existing credit customers to do something slightly different. So I think in India you've moved a little faster to how could we enable people to do installments on their debit card, and so I think that's a great advancement for the banks in India, and probably done that faster than many others around the world. Here's where I think there's a challenge. It's whether you're building it into an app environment or experience for the consumer that is truly helping them manage their money better. That you're going to keep adding products to it that do that and that expands the offering. And how do you sort of integrate that backwards into the existing banking apps or environments? And will consumers actually see the bank app as the same as a new digital player who's doing things slightly differently? And so I think that's the biggest challenge is the consumer mindset. It's not just about create a similar product. We've seen in Australia already, Commonwealth Bank rolling out Pay in 4, and it's not scaling, compared to the competitors in the market. And a lot of that's about the consumer mindset. So I think that's interesting. I think despite that, we are talking to a lot of banks and saying, hey, we can help, but let's work together. Let's not say. A lot of them say, well, can you white label your platform so we can use it? And we say, no, if you want to do a partnership, we need to think of it differently. We'll help you with acquisition of new customers that are in the millennial segment and post-millennials. Let's get into a stage where you refer customers to us. We'll give them buy now, pay later. They may never, most of them will never have had a credit card before. They don't actually want one. We will then work with you on how do we create new products and services using your licenses, but in a way that's beneficial for both. And so we're trying to find that balance of a partnership, and we're starting to get traction in a number of markets with banks who are saying, I think we can work out something here that makes sense for both of us.
But I think what you're hinting on is it does require a different mindset of being open to sharing a customer relationship and not kind of holding it back in these partnerships. I think this point on debit, you raised it well. I think in India being such a huge debit penetration we have in this market, there are a lot of debit EMIs that are propping up, but same points as you mentioned, right? There's lack of consistent experience that's being provided by lenders who have bespoke relationships with large marketplaces. They can offer installments, but because of a lack of standardized experience, lack of standardized commercials, lack of standardized offerings, the uptake is very low. So the line utilizations are very low. And I think it's a very good point you mentioned about the CBA.
Can I jump on that? Because I think there's two really important points in there. One of them is 85 to 90% of our repayments are from debit, not credit. So it's not people putting their credit card into our environment and saying, I want to pay off the installment. It's debit cards. Most of it's debit. In the US, Australia, everywhere, we've rolled this as debit or bank, not credit. And so this idea of, oh, you've got a credit facility and we'll turn it into installment, that's not the game. The game is people who have a debit account, who want a small amount of money to buy something they want and be responsible, they're the ones who want the service. So that's the first thing that's really, so it's the debit proposition that's the most important. 60%, 56% in the US and 60% of our customers have never had a credit card in the US and Australia. Never.
Wow.
So it's not, and this is a new segment of customers who are saying, this may be the only way I use credit.
Great point. Great point. We're seeing some of that in India. I think it's expanding affordability than actually going after credit card customers. So you're right. It's a whole new base. So Hamish, I've been asking you a lot of questions. So I'm gonna shift to audience questions. I was about to say consumer questions. Audience questions. So let me go through the chat window. Okay, so let's start with this. From Saloni Chandra. Why do we think BNPL is here to stay versus credit cards?
That's the question. Why will it be here to stay?
Yeah, I think you just answered, like, it may not be a credit card replacement. I think the question is, why would BNPL be here to stay versus credit cards? So I think.
Here's my opinion. If we go back to my principles earlier, a credit card gives you a limit to go and spend with, and you can spend it anywhere you want, right? And then it says, by the way, if you had a party with your friends, you could use it for that. You could put it on for buy groceries. But you could also pay off a television. Like, you could use it for anything. And the issue with the credit card is many people, because they're not disciplined in repayments, end up maxing out their limit and sitting on a revolve. Yes, there's the banks love the wealthy customers because they always pay off their credit cards, or even they may not make as much money. But this revolving credit that people get into is a problem. And so I think this is going to be more and more around, designed for customers who commit to their repayments. It's about budgeting and managing their money. It's not just about getting more credit. And so I think that's why it's going to stay. And in fact, I think it's going to grow rapidly.
Excellent. I think related question, maybe I'll pick on this. Do customers view BNPL as a means to build a good credit history for the future?
So, and that's a great point as well, that relates back to sort of managing risk. The good thing about buy now pay later is when we think people might be risky or that they haven't got the income, we start with a small amount. Do one transaction only, and if you repay it, we will extend further credit. And so you build a profile with us first. And so we feel like we're in the game of helping people learn how to use credit, and so we'll progressively give them a little more as they show that they're responsible and doing the right thing. And so I think these products are actually good at sort of helping people, as you start in your life, as you start to use some credit, this is a great way to do it and not get into tricky situations.
So you do see this data getting reported to credit bureaus, yeah?
I see what you mean. I think ultimately yes, and in fact we're okay, and we believe regulation is fine, and in fact I think it'd be great if these things were brought more into the mainstream, and that there wasn't a stigma around it. It was actually seen as what it is. And it was the one thing we just want to make sure is that regulation doesn't stifle the innovation. And so when we say we'll give someone a small amount, help them grow, that's how we want to help manage the risk. Not, hey, can we make the application process clunky? Can you ask them all about their income and all about their expenses, and until you can't give them any money? I mean, if the regulator started saying ruin the experience without and we don't believe that'll be adding the benefit to anyone. And so we're quite happy with being part of the system. Let's just keep the innovation.
Excellent. Maybe we switch to geographies like Canada, where BNPL has actually grown at a faster clip. It seems like it's just not a millennial play. It seems like it could be a Gen X and a boomer segment getting into BNPL as well. Why do you think it is?
And we are seeing that. I think some of that, because funny enough, it's when you offer slightly longer duration, you end up seeing slightly older people, ironically. So, and it's because of phases of life, right? You know, when you're younger, you are buying fashion, you know, fashion, beauty, sports equipment, things that, you know, smaller value, but, you know, your iPhone as well. But as you get older, you're setting up a house, you're providing for a new baby. And so what we're seeing is, you know, those offerings that are slightly wider in terms of the verticals that they appeal to shows you which customers enjoy it. And I think, again, you know, we all want to sort of schedule our payments, not get into trouble, not have to worry about it, have a bit more transparent in sort of fees. And I think that appeals to older than just millennials. You know, and we call them sort of, our CMO has a great, because we are them, is the post-millennial or the, the mature millennial.
The mature millennial, you're right. I think a lot of people think millennials are still in college. They aren't actually. Millennials are actually, a lot of millennials are buying their first homes and settling down. And so I think their curve in how they're utilizing credit has actually matured quite a bit. Yeah, totally agree. I think I'll take one more question in the interest of time. Does the core banking and NBFC, or these are non-bank financial companies, have a role to play and potentially have strategic partnerships in BNPL?
Look, the biggest challenge for banks is their scale, their infrastructure, the sort of, it's hard for banks to break out of some of the things it's traditionally done and be really innovative. And it's kind of the innovator's dilemma, right? And so you've seen a lot of banks say, well, should we disrupt the whole core, or should we sort of partner with somebody who can help us build it, and we're sort of managing our transition? And I think that's probably the better way to go anyway. I don't believe, you know, for any stretch, that all of a sudden buy now, pay later is going to take banks out. Like, that's just not reality. But it's offering a whole bunch of new services to a new set of customers that are important to the future of the bank. And I think these partnerships are beneficial. And there are some truths that are going to have to be let go a little bit. Like, who owns the customer? I must own the customer.
Yeah.
I must always be in my environment. And, you know, if you hold that true forever, then it's going to be a struggle.
Excellent points. Thank you, Hamish. I think I really enjoyed the quote unquote the fireside chat, but loved hearing your perspectives, honestly. And I hope the audience gained something out of it as well. So we can move to the next segment. So back to you, Madan.
Thanks, Arvind. Thanks, Hamish. That was a very insightful conversation, and thanks for stimulating so much discussion and questions from our audience. Unfortunately, we can't do all the questions, but hopefully we can take these questions some other time. But as clearly evidenced in the conversations we just heard, it's clear that BNPL, buy now, pay later, is key to the credit landscape in India. We'd therefore like to wrap up this conversation now with a perspective from Visa on the BNPL opportunity. To do this, we have with us Nidhi Katia, Senior Director for Consumer Solutions, India and South Asia at Visa. Over to you now, Nidhi.
Good evening, everyone, and thank you once again for joining the first webinar of the Visa Fintech Initiative. I would especially like to thank Hamish and Arvind. It was an extremely insightful fireside chat, and I'm sure we heard Hamish's perspective on this emerging BNPL phenomena, and we picked out something interesting new today. Personally, for me, Hamish, something that I'll definitely remember and that will stay with me was the insight that you show that how BNPL actually makes the consumer more responsible, and how it helps in budgeting better versus how traditionally people have thought about this space and how people have gone about it. Without much ado, I would now go into a quick sneak peek of what BNPL and Visa we are doing over here. Affordability has been a rapidly growing opportunity, and it's an extremely key priority. And we heard Hamish and Arvind also talk about it earlier for both Visa globally and in India. As per our combined estimates with Euromonitor and overall, these flows account for close to 1.4 trillion in 2019 and are estimated to double themselves by 2025. Broadly, our strategy has been twofold. One is to drive flows on existing cards issued by banks, and second is to credentialize these credit lines offered by fintechs by tapping into these new to credit segments targeted by these fintechs. And we spoke and we heard quite a bit about these segments from the conversation earlier, that this is how the Gen Z and the millennial segment that is tapping into this fintech opportunity. And one differentiation that started to happen over time, and Hamish elaborated about it a lot, was around the whole debit card play. Credit EMIs were predominantly and traditionally thought about to stay with the credit card space. And that's where this change and shift in thinking has happened, where debit EMI has started to flourish over the last couple of years. Closer home in India, when we look at this trend, there is an estimated 1.4 trillion retail consumer flows across various categories, leading from apparels and accessories, consumer durables, health, furnishing, etc., which are contributing to overall 80% of our total retail spends. Of the 1.4 trillion opportunity, we see a potential 63 billion opportunity coming from lending, and this has been growing at a healthy clip. Uh, like Hamish alluded to earlier, installments is not a new phenomenon in India, and this segment has been evolving and growing at such a fast pace. Fintech and new age NBFC-led models are becoming totally formless and mobile first increasingly. With the increasing smartphone penetration that we're seeing in this country, mobile has become the most convenient customer identification method. So gone are the traditional identification methods and is being adopted across channels. Currently, what we see is that there are multiple players that exist in this ecosystem which are powering these flows. Broadly, what's happened is that the aggregators are driving merchant acceptance and managing customer experience, which again is very key and critical to the entire set of flows. And then there are enablers who are offering real-time connectivity between the lenders and the aggregators in the ecosystem. While these flows have existed and they're constantly changing and dynamic trends have been there is a significant opportunity for Visa in this space. What we've identified is that there is a need to solve for scale, governance, and efficiency of these installment transactions. The current processes which have been evolved over time, they lack consistent reconciliation and settlement methodology. And at the same time, there is no standard dispute management process. So what in short is leading to is a multitude of bilaterals which exist in the market, and there is a consistent need for a standardized framework which Visa as a network can bring. And I'll share with you in subsequent pages how we're trying to kind of solve for this. During our discussions with various ecosystem players, and we have identified some of these key challenges that exist in the BNPL space, and solving for few things are predominant and key for these partners. One is increasing line usability, and then we heard about this earlier as well, where while lines have been given to the consumers, but they're not able to use it. And that's predominantly because of the fact that there is an ecosystem challenge of acceptance and how the network actually helps solve for that whole wider acceptance piece. The other point is on expanding coverage, as most of these solutions are currently restricted to single channels. So either they're online or they're available offline. What the network solution allows to do is to make a solution which is agnostic to online or offline as a footprint channel. And at the same time, keeping the customer experience intact. And we heard Hamish talk about this on several occasions, that how is it important to maintain the customer experience, and specifically in India, where people are now increasingly latching on to the one-click checkout experience, which has been established very well by some of the leading BNPL players. So really, how do you drive usability? How do you increase coverage and footprint in this space, and at the same time drive the same consistent customer experience? That's what the market ask for us has been. Towards that end, here is what the solution is, what we put in the market. The Visa solution actually helps in streamlining the current process of offering EMI payment solutions, along with offering an EMI offer which is network agnostic and API based. So our solution actually works across network schemes. It's not restricted to Visa only. The other big advantage is that it's a light implementation for the issuer. So the solution is fully API based and there are no changes required at the switch end, which helps in reducing the time to market. And that's the biggest hindrance in taking any solution to market, because there are complex and archaic architectures that exist in the market today. There is a single integration and takes away the need to build direct integrations or transactions between for settlement with individual issuers. Right now, what happens is that there are these multitude of bilaterals where there are these individual pipes going, but this solution actually aggregates everything through a direct single integration pipe. Most importantly, the point that we spoke about earlier and Arvind was also alluding to is the fact that it offers standardized and automated processing and settlement. Since we offer settlement of funds via member banks, there is no requirement of setting up a separate recon and settlement process for merchants and banks. Currently, this is fully manual and this completely automates without a separate setup in place. One big advantage which comes with the entire network flow is the standardization of dispute management process, which is based on network settlement. Hence, the network controls and the entire refund and chargeback framework is applicable to these flows as would do to a normal transaction. So hence there is no ambiguity in terms of what happens if there's a partial refund, what happens in case if there's a cashback to be processed. It's a very simple and standard flow that we have over here. And lastly, and most importantly, it's a scalable model which is driven by the Visa network, providing opportunity to a large number of long-tail banks and merchants to participate in this solution, who for a very long time have not been able to participate because of the whole widespread acceptance. So in summary, Visa is partnering with Bnpl players, banks, and other lenders by leveraging our capabilities to deliver wide-scale acceptance across offline and online merchants. Something that we heard Hamish also talk about earlier, a standardized experience and governance framework. And lastly, and most importantly, our solution is agnostic to channels, form factors that are used by the customer. So be it your card or your mobile phone, feel free to use this platform. That was all I had for today. This was a quick sneak peek into the Visa installment solution. And thank you once again for joining us. And we'll be happy to partner with you and discuss this capability in detail. And more importantly, offer a bespoke version which can suit to your needs and tailor to your requirements.
Thank you so much, Nidhi. Thank you, Suchai, Arvind, and Hamish. I wish you all the very best in your efforts. We look forward to the fintech community tapping into the true potential of credit as well. A big thank you to you, our listeners, as well, for tuning in. Please do share these learnings widely so that others benefit also from these insights. Keep tuning in for more such insights. Good day, and thank you once again. All the best.